Good morning, students. Today we are going to read the factors affecting the elasticity of the supply and the importance of the elasticity of the supply in the topic of elasticity of supply in the subject of economics O levels. So concentrate yourself here. We are going to start. Supply is elastic when firms can easily and quickly change the amount supplied in response to a change in the price. So if the supply can be easily changed, then the supply is elastic. And if supply is inelastic, when the quantity supplied cannot be easily and quickly changed in response to price changes. So if the supply cannot be easily changed, then the supply will be inelastic. The following factors have an important impact on the elasticity of the supply. Number one, whether or not there is an excess capacity. Number two, the level of the stocks. Number three, whether the product is a manufactured or an agricultural one. And number four, short run and long run. And now we will read these factors in detail one by one. Number one factor is whether or not there is an excess capacity. So look now, this is very common sense topic. When an industry is working below capacity, machines will be lying idle and labor will be unemployed or working short days. In this case, supply will be elastic because a positive change in the price can have a very significant effect on the output, as the machines are just waiting to be worked to capacity. So the machines will going on work because if there is a positive effect. And if the industry is fully employed, so look now, fully employed, it means there is no spare machinery or spare labor. However, supply will be inelastic, at least in the short run. In the long run, supply can be increased as more machines are set up and more assembly lines are put into place. The next factor that we are going to read is the level of the stocks. If an industry is holding large stocks of the products, large inventories, an increase in the demand can be met by supplying these stocks because they have large stocks. So it means the supply will be elastic. And if the stocks are not sufficient, so the supply will be inelastic. While the stocks last, supply will be elastic. The next factor that we are going to read is the manufactured goods and the agricultural products. In general, manufactured goods are more elastic in supply because they can be made quickly, but the agricultural products are normally inelastic in supply because they require their time to be grown up. In the case of the farm products, elasticity of the supply is affected by the length of the growing season, whereas with the manufactured products, if there is a capacity or stock, supply can be increased. The next factor that we are going to read is the short run and long run. Short run is defined as the period of the time during which there is at least one fixed factor of the production. For example, during a month, the output in a shared factory could increase by hiring more staff or asking current staff to work overtime while keeping machinery unchanged. So this is a short run phenomena. This can be increased production, but up to a limit allowed by the current machinery. In order to increase production significantly, more machinery has to be bought. Maybe new facilities have to be built, etc. These take more time. The short period in some industries may be only a matter of days. For example, clothing, but in others it could mean months. For example, construction. Short run is the period where supply is relatively inelastic. In the long run, all of the factors of the production can be changed. For example, the shirt factory may move to a bigger plant or buy new machinery. So if this is done, production will be increased and supply will be increased. The construction firm may use more contractors, train more engineers, or invest in more diggers. The long run could be only months for some firms, but years in the other. Long run is the period where supply is relatively elastic. Okay, the next thing in the lecture that we are going to read is the importance of measuring the elasticity of the supply. In general, producers need to know the elasticity of the supply in order to plan. This knowledge will help suppliers with changes in the factors of the production in response to the price changes. Example is here. The supply of the goods such as CDs and the televisions are quite price elastic in the event of a sale period. So sale period is this in which the sale is high, demand is high. So when prices are decreased, the quantity supplied of these goods will increase greatly because demand will be greater. A 10% decrease in the price may cause a 16% increase in the quantity supplied. Therefore, suppliers would produce and stock more of these goods in the months preceding the sale period. This will require higher levels of the factors of the production. And here are the factors of the production. More staff will be required in the factory for delivery and for the shop floor of the store. Capital, more machinery may be required to produce the extra output in the sale period, more vans for the delivery, more cash tills operating, and perhaps more demonstration models for use in the store. Land, more space may be hired to store the extra goods until they are ready for delivery to the stores. Entrepreneurship or enterprise, in order to produce the extra goods, more investment may be used in order to meet the cost of the above increased factors of the production. This will require more risk takers and backing from firms or individuals. And lastly, here is a note. These adjustments in the factors of the production would only be for the sale period and therefore for the short run only, because the sale period is very short, not for the whole season. If, however, there were a more lasting increase or decrease in the cost of one or more of the factors of the production, then this would be regarded as the long run. Because if there is the reduced prices of the factors of the production, so the cost of the production will be reduced, so the suppliers will be more willing to produce more. So this was the lecture, students. I hope so this will be much more easier and interesting for you to understand. So read this lecture again, understand it, learn it, and make your notes. Thank you so much.